Well, it's good to see such a distinguished audience. Yeah, nice to know
Thank you.
we're talking to the real people in Cape Town today, and we've got an amazing team. I mean, what is amazing about these panels is the access to what's going on in the world, the guys who make the decisions. It's always interesting, and there's always interesting stuff that just comes out that you don't expect. So I'm sure they'll rise to the occasion. So I dare not go through the achievements of the people in front of you. So I'm going to leave it to them to give you a brief synopsis of what they've been doing and what they're doing now. Carol, go for it.
Hi, I'm Caroline Donally. I co-run and co-manage the Sprott Streaming and Royalty Fund. So it's what it sounds like. We provide finance to mining companies to move their projects forward, mostly in the form of streams and royalties. We invest across commodities. Our portfolio is gold, silver, roughly about half gold, silver, and then half everything else, which includes copper, zinc, lead, cobalt, graphite, fluorspar, tin, kind of you name it, we've probably looked at it and put out a term sheet or tried to invest in it. We invest globally, predominantly been North America so far, just because of the opportunity set that we've seen, but we have exposure across Africa, Latin America, and into Europe.
Cool, thank you. Peter.
Is this working?
No. Click it up.
Hi, it's working, correct? I'm on the other side of the railroad tracks from Caroline. So I'm Peter Major, Modern Corporate Solutions, based in South Africa. The government brags up they got 6,152 abandoned mines, and we've been going to the government for 20 years saying we want your best 1%. And we've even given them the list. But it's taken us 20 years to get 11. So I'm not going to live long enough to get much more. And we've found South Africa rates below North Korea and Afghanistan for investing, because my brother's done 2 transactions in North Korea. He's an American. And my friend has done 3 in Afghanistan with the Taliban. And I've only done 1 the last year. So that's where we rank. So we've diversified. We now have 3 projects in North America. But our job is to be selective, but help people who have good projects and match them up with people like Caroline and her business.
Cool. Rakesh.
Hi, I did send a photograph. My name is Rakesh Harribhai. I'm also based in South Africa. I work with the Triple Flag Precious Metals, looking after largely the African region in corporate development. Triple Flag is a royalty and streaming company. We're listed on the Toronto Stock Exchange and New York Stock Exchange. We have 235 assets across the Americas, Africa, Europe, Asia, and Australia. In Africa, we have 13 royalties at various stages and 2 producing streams. We provide low-cost capital over the life of mine that's largely precious metal focused.
Cool.
Hi, I'm David Rhodes. Couple of hats. First one is I'm executive chairman of a small stream and water company, slightly different to my colleague here on the right. I'm also a chairman of a Mexican-listed mining company, but the main reason I'm here is I'm a managing director of Endeavour Financial, one of the best financial advisors in the world. And obviously I've paid audience member there. And obviously focusing on Africa for this main discussion period.
And as usual, they've been extremely modest in their achievements and left out all sorts of really interesting things. Caroline, we know from Denham Capital. Peter, one of the finest mining analysts ever. Rakesh did an awful lot of corporate finance for Xstrata over the years. And David has been pretty solid with Endeavour for a long time. Yeah. Anyway, we're here to discuss strategic mine finance, managing new risk and financing solutions to boost African projects. So here we go. First question to Caroline. What is the outlook for regional projects? Where is the industry currently strongest?
That's a very broad question, and I think we could probably talk about that for 45 minutes, though I note the timer hasn't started, so I don't really know how much time we do have. You know, I think, as people always say, good projects will find funding, and it's not irrelevant where the projects are, but it is a component for investors, and it's often a case of finding the investor with the appropriate risk appetite. And, I think when we talk on these panels and when we talk, and I talk to people, often investors are all lumped together. And there is a diversification across the investors as to who will take what risk appetite. So, when you say which region is strongest, it's a question of, well, what's your social circle that you're hanging out with as to where are they focused? So it's, I think it's very much a view of what projects, what projects we see relative to, say, what projects other people see. We're North American based, so we typically see projects across North America just because of where we're based. Having said that, though, more recently we've started to see quite a lot of interest in Africa. The whole Nubian Shield side of the equation seems to be opening up. Lots of interest in Ethiopia. Obviously, West Africa has its challenges in part, but some parts of it are pretty good. And I think Namibia and South Africa will always be on investors' radars, even if some of the aspects around South Africa, given where we are, people can sometimes find challenging, as Peter mentioned.
Peter, how are you going to follow that?
Yeah, not easy to beat. I'm kind of split down the middle. After 50 solid years of selling mining equipment, mines, I was in asset management for 15 years. I'm split down the middle. Half of it, I believe, is like Caroline said. It's the audience. It's who you're selling to. If you've got an asset, don't just blindly go out and waste all your time and energy trying to sell it to everybody. Try and sharpshoot who would be looking for this kind of asset. That's half of the job. The other half of the job is do a good job selling what you've got, because a lot of us can't just change what we have to sell. This is what we're given. And Hey Don, who is just here, is great at that. He can take any asset and he makes it saleable, almost any audience. So if you work hard at making your asset sellable to the right audience and you do a good enough job, you can actually sell it to a not perfect audience. And I'll give an example. When the US market collapsed in 2008, the S&P 500 fell to a level of 700. Anybody know where it is today? 6,000. Now that's a pretty safe investment. The S&P 500, 500 big companies in a good location. So it's gone from 700 to 6,000. So if you don't watch who you're selling to, they say, Pete, why would I want to buy a mining asset that's fallen 50% since 2008 and it hasn't budged? It's still down, 50% down. I said, that's all the reason you have to look at it. Maybe the S&P will go forever and maybe mining will go down forever, but you can't read a newspaper or see the news without hearing about critical minerals that we need them to live. So, yeah, know your asset well. There's always somebody out there that fits that asset. Do your best to find the company or the person that does fit that asset, that can handle the risk, the jurisdiction. And then just make sure you do a great sales job saying, hey, this is cheap insurance. Like Hay said, we got in it, that Habe copper mine cheap. So everything is sellable if you find the right person, use the right approach.
So, I think from a streaming and royalty company perspective, we're looking for lots of resource upside, strong exploration potential, and Africa is incredibly geologically endowed, as most of us know. And I think it's just worth pointing out that in terms of where we see the strongest strongest growth, there's in the last 10 years Africa's hosted 3 of the 10 tier 1 discoveries, right? And that's been in the Central Copper African Belt, West African Gold, and the Arabian Shield, as Caroline said. So I think projects around those regions will continue to sustain themselves. That's apart from, of course, the Namibias and the Botswanas and the more, countries in SADC that most of us are basically looking at where there's more established infrastructure. In terms of commodities, I think, again, speaking with the streaming buyers and the precious metal buyers, I think gold is the gift that keeps on giving. So yeah, gold is a focus area, and of course, copper is also one of those areas.
Yeah, I actually think from a regional point of view, it doesn't really matter. It's all about the quality of the asset. So from a financing point of view, the more the quality of the assets, the high margin, strong economics, that drives financeability. So it doesn't matter where it is. You can work around countries. You can work around the issues of various countries. So it's really about the economics of the mine.
So David, you're ready for the next question, I think, because where do you see the bulk of financing going for projects across Africa? How are these strategic decisions being made?
So I have to echo the thoughts that gold is number one. If you need financing in Africa, gold mines, financing for gold mines is relatively easy to find, mainly because it's lower capex. Most gold mines are $500 million and less, and there's a quicker payback. So from a financing point of view, gold mines are easier. When you're looking at the base metals, the longer tenor type financings, then critical metals, I think, are the next aspect of where I think Africa can get financing. I mean, we've been talking to the US EXIM guys. They've got a lot of money to spend trying to get raw materials into the US or using, some form of US procurement financing. So my point of view, copper, critical metals, rare earths, that's where the future is if I was looking for, getting involved in developing a project in Africa.
Yeah, so I think, in terms of gold, and West African gold is obviously topical at the moment, but it's obviously a region that cannot be ignored. Côte d'Ivoire is taken on the mantle of Africa Light. But, from our perspective, you can navigate political risk, but, security considerations are actually binary. And, that excludes a part of the French Sahel that's basically become a bit hairy of late.
So that's part of your strategic decision-making is avoid hairy areas. Yeah.
John, please repeat the question for me.
Okay. Where do you see the bulk of financing going? How are these strategic decisions being made?
Look, how I see it's how Peter Meyer sees it. He's probably wrong. I see all the people we talk to and everything I read, 50% of the finance going to gold, probably 25% to copper. And that's just what it looks like. I haven't seen numbers to back that up. Maybe I did see numbers like that about 10 years ago, and I think those numbers have been intact for a long time. And yeah, the people who phone us up, I turn down almost anything other than a rudimentary base metal and gold now. It's too much work finding investors that want it. And then I always look at projects, would I put my money in here? And at heart, I'm a fund manager, and I was a good fund manager. So I really take into account the risk and the likelihoods. So I never liked graphite, lithium. I couldn't bring myself to face one client trying to sell those. But I can look them in the eye and sell them base metals. And usually gold. I can't sell gold now. I can sell a gold project if I know the costs are low. If I know the costs can be below, say, $1,200. And there's a lot of projects out there. I remember when I started at Allen Gray as a gold analyst, and I was diversifying on my own without permission. And I found it so fascinating that in all my work, Palabora copper mine was the third lowest grade copper mine in the world. Okay, that shouldn't knock anybody off their feet. But what knocked me off my feet was, at the time, in 89, 90, it was the third most profitable copper mine in the world. And that's always stuck with me. That's what can be done, and that's what makes a good investment. It's not just the grade, it's do all the boxes add up to a great IRR. But yeah, copper and gold's where I see most of the interest, 60 to 70% easy.
So strategy by analysis. Okay.
So we manage a portfolio of assets, to Peter's point about being a portfolio manager. We will assess regions, countries, commodities on a portfolio basis. So, I mentioned earlier our commodity suite is roughly half gold, silver, half everything else. And we try and roughly stick to that. As far as country exposure goes or region exposure, we follow a similar sort of approach. We're not going to take our entire portfolio and put it in, or our entire fund and put it into, one or two extremely risky jurisdictions. Like that wouldn't be sensible from a portfolio approach. So, we can take smaller amounts of our portfolio for more risky jurisdictions, but then the projects have got to be exceptionally compelling if the jurisdiction is risky. I used to work with someone who said, you have two things, right? You have country and you have commodity, and everything else is part of due diligence. You can't have two hard things. You can't have a hard country and a hard commodity. You need to at least have one of those be easy. So if you've got a difficult jurisdiction, you need an easy commodity. You preferably need gold. If you've got, a difficult commodity, like you're trying to do lithium or graphite or one of those which is more technically challenging, where the markets are smaller or it's harder to finance, etc., then you want to do those in more reasonable, sensible jurisdictions. So, we consider our exposure on a portfolio basis, but we are very specific around the actual details and the economics of the project, as well as considering the overall risk appetite.
Cool. David, I think this one's for you. Key risks and challenges for the African market? What do investors need to know, and how do you navigate investments here?
Well, I think Africa's a big country, so there's a big difference between north, south, east, and west. If you look at the headline news you get around the world, you only get bad news in newspapers. So all you get is military coups, things happening. You get people being sadly detained in parts of Africa. So from an investor point of view, when you look globally, and I think it comes to the point about mentioned earlier about the types of investors you talk to, when you go around the world and you talk about mining, most people don't want to invest because the headline news is not positive. Because all you get is the bad news that comes out of countries, environments, and that side of things. So what can we do? I think strategically looking at the right investor class, people who understand mining. And I come back to having world-class projects that are going to feed the world and feed the world in the supply of those metals. So it's very difficult to make a broad statement because each part of Africa is so different. But in my view, I just drive the value of, to investors, these are quality assets you don't get anywhere else in the world. You don't get the size of assets. You don't get the grade and quality. And also in a lot of countries we deal with in Africa, they want mining. They want the mining GDP. They want the growth. They want the jobs creation. And you don't get that in other parts of the world. And that's really how we promote Africa to our investor base, is that they actually want mining to be part of their industry compared to other parts of the world where it's viewed as not as favorably as it is in Africa.
Rakesh, where do you see the key risks and challenges?
Yeah, so I think firstly, just following on from what Caroline is saying, we also adopt, as a streaming and royalty company with 235 assets, we have a portfolio approach. So that in its own is risk diversification, right? In terms of where we can actually place our bets. But we also take, because our finance is over life of mine. We adopt a very strong partnership model. So we literally, to use the words that were said yesterday, we literally married for life, and therefore a lot more ingrained in these partnerships than most other sort of funders. And typically streams and royalties survive all other types of funding. But I think embedded in that is also just in terms of how we work with the operator in terms of identifying the risks and mitigating the risks. And when it comes to Africa, unlike the developed world, if you build a mining asset, it's sometimes not even recognized. But in Africa, you build a mining asset, it can shift the needle on the GDP. You've got communities, expectations to manage. So stakeholder alignment in Africa is incredibly important. Your host government, your communities, your employees, this is all part of the economic pie that mining companies these days are a bit more transparent on. And that's what host governments are actually trying to solve for. So I would say that the biggest risk is the relationship with your host government, especially if you have a sizable mining project, and your ability to mitigate that through strong stakeholder engagement and alignment is critical.
And
for operating in
how
Africa.
do you get involved? What do you do? Give us an example of what you do.
So, I mean, as far as ESG is concerned, for example, I mean, the thing is, ESG is basically pretty visible to doorstep communities. So, in addition to the funding that we provide, we also basically get involved in the community or the social and labor plan, of the mines. So, I mean, a good example is we did a transaction in 2019 with the Bafokeng Platinum, and the Royal Bafokeng is basically, used to be a community-based shareholding in the town of Pokeng in Rustenburg. It's not anywhere close to to the kind of poverty that you basically find in other parts of Africa, but nonetheless, it is a community in need. And what we did was we provided a bursary program over the life of mines of $100,000 a year. We take in 10 students on average a year. So, and over and above that, when we did the transaction 2 years later, it was COVID. So we got involved in terms of sponsoring remote learning, with tablets. So I mean, we don't just stand back. I mean, we get involved.
Good. It's always good to hear of the benefits. Peter. So we're talking about key risks and challenges.
Okay. I've come to the point in life, the three main key risks I see now are government, and government, especially after this Mali thing. This has really hit me hard. The DRC hit me in First Quantum hard about 12 years ago when they just confiscated, was it Kolwezi? Just, took the mine away and sold it to ENRC the same week for $575. But there was a good reaction from the world community. First Quantum did everything right. They went to the United Nations, The Hague, the World Court, the IMF, everybody. And all those entities pressurized DRC, they got the mine back. They left there forever, they got the money back for the mine. But it's government. And another example, I love examples. Who owns the BC copper mine? The BC copper mine? Alphamin. I remember when Anton brought that to me. I said, Anton, I'm not a geologist, but I'm kind of like you. I get fascinated by the ore body. But the DRC is just a step too far. He says, Pete, the grades are 5, 6, 7. This is 10. And I just couldn't do it. And man, I came close. But that's a perfect example. Risky country, but the project was so good, all those investors made more money than I thought they would. They made a real good return on it, as they should, because it's such a great project. Whatever happens, the rebels, the bridge gets washed out, the road gets washed out, some of the mine caves in, they have to redo it. Doesn't matter. When the grade is so high, almost nothing matters. Even the government can't deter a good return on that. The converse of that is Perrine Zinc Mine. When I saw Perrine Zinc Mine was going to go ahead in 87, 88, I said, are you guys out of your mind? It's the lowest grade zinc lead mine I've ever seen. But because it was in the most stable, mining-friendly country on the planet with fantastic infrastructure, established tax regime, Perrine was a raging success in almost the lowest zinc prices we ever saw, as was Palabora that ran all those years. So, good example. If you got a great government, they keep the rebels in line. They keep the community in line. They keep the unions in line. And if you have a bad government, boy, they can just light a match under either of those. So those are my three big risks, all government.
I think the one aspect we haven't touched on at all, of course, is management. And, to Peter's point about government, there's a reciprocal relationship there between the management and the government. And how the management team sets things up in country, I think, is often the starting block for whether this is going to be a good relationship or perhaps one which doesn't work as well as one would expect. And there are, there's a few of us involved who were involved in AlphaMan in the early days, a few of us in the room here, and that was set up in such a way that there is no ability there for the government to point fingers at the shareholders and say, you're taking money out before us, which you don't often see in other mining projects. You often see the equity all coming in a shareholder loan, and that shareholder loan racking up interest. And so what happens is, by the time the shareholder loan is eventually repaid, the government has seen no money. No money from its, free carry, from its stake, from whatever equity position it holds. And that's not a good situation. So, I think there are clearly all of these items are risks that we've spoken about. But the other item, which for us is very important to assess, is not only what are the management team's technical capabilities, like can they mine it, can they process it, do they have good geologists, that sort of thing, but how do they go about managing the stakeholder relationships? Communities, governments, whoever else it'll be. And that for us is also a critical component of our risk assessment.
Yeah, it's tempting to take this into a discussion on the government of Mali, but I don't think we got time for that. I've got quite a long question for you here, so please focus. What is Africa's role in developing critical minerals projects? As the energy transition gains pace, the focus is now on growing Africa's critical mineral supply. How do you see this focus developing? Anything the global investment industry needs to know?
I'll start with that, if I may, because we're doing a lot of work in the critical metal space, looking at the opportunities. There is, as I mentioned, a lot of government money looking to source the critical minerals and the rare earths, etc. The trouble is the pricing is uneconomic with the way the pricing today is, because China obviously is an oligopoly. They produce and process all the rare earths, and they're doing it very cheaply on purpose to stop new entrants. So simply the governments around the world who want to move processing away from China, and obviously the US is leading that development, they need to work out a pricing mechanism where investors and financiers can finance rare earths and critical metals to make a profit. Because at the moment it's very tough to make a profit. So my answer is the governments need to sort out a minimum pricing regime or some kind of price plus to reward investors. Otherwise, it's going to be very difficult to advance that.
Well, China seems to be manipulating prices down, but countries like Indonesia try and manipulate them back up again. Anyway, Rakesh.
Yeah, I think, that's the difference between critical minerals and advantage minerals, right? So Indonesia basically sits with the advantage mineral, and they're trying to do as much as they can. But I think, as far as critical minerals is concerned, I think these days critical minerals span the entire spectrum from energy transition to energy security to defense. And a lot of the critical minerals, talking to, David's point in terms of volatility, they have this byproduct nature about them, right? So they have very high betas, and they're subject to volatility naturally. You can't put an on and off button, when it comes to cobalt, when it comes to, to a number of critical metals for that matter. Rare earths, as a case in point, is 16 different elements. So, there's no on-off switch in terms of controlling supply demand. But just bring it back to Africa. I think the issue is really sort of when it, in terms of most mining codes in Africa, basically, some of them try to force beneficiation, and I think lots of African countries are trying to to look at the value chain in terms of battery metals. The difficulty in that, as it is not only in African countries but other parts of the world, is that the chemistry is a lot more complex than the simple metallurgy of producing gold or anything else. And I think Africa's biggest challenge is actually the infrastructure. So, I mean, as an example, we don't have the energy security yet. To be able to start making battery metal precursors is just one step too far. So, local beneficiation has become a bit aspirational. And again, anecdotally, if you look at South Africa is the biggest, has the biggest chrome resources in the world, and at one stage it was the biggest producer of ferrochrome in the world. But with the energy costs going up, it's lost a lot of that shelf space to China. So China is able to make ferrochrome more competitively by importing 2.5 tons of chrome ore and still basically processing into ferrochrome. So I think the infrastructure challenge insofar as energy security is concerned, that needs to be resolved before Africa can actually sort of, I think, in fact, it was actually nicely summed up in The Economist last month, where it says Africa needs 20th century kit to tackle the 21st century.
That's a fair comment. You're the second guy today to talk about African infrastructure and how it needs to improve.
Yeah, maybe I'm dyslexic, John, but this critical mineral thing just freezes my brain. I can't get my head around what's a critical mineral, because I know rebar is pretty critical if you're putting up a skyscraper. I know aluminum's pretty critical if you're building an airplane. But as Rakesh says, infrastructure makes those things critical. So I don't know, what's the definition of a critical mineral? Is it something you can put in a suitcase or fly it out in a helicopter or plane? Is it something that's small and valuable as opposed to large? Because it depends what you want to do with it. That means it's critical to your life, your country, that you have to have it. Look, Africa's got all the minerals known to man. And we need to get the minerals from someplace. And Africa isn't one focused country. It's 55 independent countries. So if 2 or 3 or a dozen of the African countries are too difficult to get it, the odds are we'll be able to find that mineral in another one. So I think, to me, it's things we said. Caroline was right. I still think countries first, but management's a close second. Yeah, and Rakesh, infrastructure is a close third. Because I would rather, if I'm flying down in the jungle, I'd rather have a rare earth plant than an iron ore plant, because you can get it out. I would rather develop steam comes crawl up here in the Karoo, and I've got to use a generator to generate my electricity. But that rare earth I can handle, even though it's complex. I'd rather do that than open a manganese or an iron ore mine around Kuruman, because I just know I won't get the infrastructure.
Well, you're right. Almost every metal is classed as critical these days. And that really depends on people worrying, how much anyone's worrying about whether they can get it or not.
Yeah, skyscrapers to third world country is important as a F-18 Hornet to the U.S. It needs a tenth of them.
So, I think that the issue that we struggle with around critical minerals, and I'm going to exclude, most of the base metals, is that the markets are so small. The markets for graphite, lithium, fluorspar, rare earths, these are teeny markets, teeny markets. And when you look at what's being produced and where it's being produced, if it wasn't for onshoring, nearshoring, friendshoring, would anybody be bothered with these types of commodities? I think they would only be bothered with them if the assets are really super quality. So to me, there's the whole political overlay as to why we all want to develop critical minerals is also something to bear in mind. Because typically you develop projects because you can see that there are demand requirements for them. But if your demand is pretty much taken up by what's being produced currently, and let's face it, maybe you can tell, I don't believe those graphs that show that the demand is all going this way and the supply is going that way. We've seen these graphs for years, right? And it doesn't happen. Demand cannot continue like that while supply is down.
Do you believe the guy that showed you the graph?
So, that for us is where we struggle with critical minerals, is very small markets, limited buyers. Often the production's hard to sell. You know, you're selling to a very small quantity of interested parties. There are some pricing dynamics that kind of hard to get your head around. So, you know, I'm perhaps skeptical of developing projects for the sake of more political reasons than actual supply-demand reasons. And, you know, if I look at some of the critical minerals that we funded them from a defensive basis. So we've provided money for cobalt and for graphite, which are going into industrial uses. The graphite we funded is not actually going into batteries. You know, the battery factories haven't caught up. So there's a first mover, I actually call it a first mover disadvantage in something like graphite, where that end market, which everyone expects to be there, isn't quite there yet. So if you are financing those critical minerals, you need to be able to finance them into an existing market if you actually want to get your money back now.
Well, there's no doubt with graphite that the petrochemical industry is supplying a lot of that at the moment. And it's the challenge for the mining companies to replace that with more environmentally friendly natural graphite, we hope. Anyway, last question.
Yeah, sorry, but I just want to add on to what Caroline says about those demand graphs. I mean, so if you look at the electric vehicle demand or the electric vehicle evolution graph, right? I mean, it depends whether you're listening to it from a battery metal producer or for a platinum group metals producer. Because the PGM guys will tell you that, you know, EVs are dead, hybrids are in, and of course, I mean, the battery metal guys are going to tell you the opposite. So yeah, so you've got to take your information with circumspect.
Well, everything evolves at its own pace, doesn't it? So last question, social license. How does this impact which projects receive funding? How do you approach this, Caroline?
Critical part of the puzzle. You know, without the social license, frankly, there's nothing. I would say, though, on the whole, as you know, as I look across the mining industry and the number of years I've been in it, by and large, sure, there have been some spectacular failures, but by and large, mining companies do the right thing. Well, they have to. They have to because you're not going to get a mining permit unless you're doing the right thing. And you're not going to get your workforce unless you're doing the right thing. So, you know, I think we all spend a lot of time talking about social license to operate. To me, it's very company specific and, you know, again, management team specific as to how they set themselves up for success with communities, with governments, with, you know, NGOs if there happen to be those in the area. But you know, a very important piece of the puzzle.
Boy, John, this is an intractable, ongoing problem, this social license. And to me, government has a lot to do with it. They can sway the people either way, you know, propaganda, maybe the truth. So, yeah, I just see all the mining companies bending over and working harder and taking out that wallet more often than I've seen in my life in mining. And that goes back to the late 60s. It's just ongoing. And I think countries, I'll bet, you ask 200 countries what industry you like the most. I'm sure they're all going to say mining. Because, geez, mining takes so much money to get set up, and you can never leave town. You've sunk that shaft, you've driven the levels, you built the mill. And these countries, everybody exploits it. The community, the unions, they know you can't pack up and leave. They give you a hard time when you're in IT. The next day, the building's deserted. They don't even know where you went. But mining, yeah, you say, keep throwing money, keep lobbying. Yeah, I guess it's just ongoing. To me, it's scary because it's just limitless, endless. It just keeps going and going. But we see it's so important. You got to have all three on your side, the government, the community, and the unions, and your employees. And you got to have them on your side all the time. It's intractable.
Yeah, look, I mean, I think social license to operate is in the DNA of every miner, right? I mean, we put in fixed investment, we can't pack it up and leave. But I mean, as I said earlier, you know, ESG is pretty visible in African communities. So, you know, I mean, you know, whatever investment you make in local infrastructure in terms of supply development programs, I mean, that multiplies the community's GDP quite substantially. And, you know, I mean, despite Peter's views, I mean, you know, the South African Mining Charter is actually, despite all the criticism, is a good example of a document that actually sort of goes across the spectrum in terms of labor, employees, communities, supply development programs, that effectively covers the entire spectrum of social license. How they administer it is a different story, but I mean, it is a robust piece of document in terms of managing ESG.
Yeah, I mean, it's tough to say much more because I think it's been well covered. But I think the key thing is social license is in every business, every industry around the world. So it's just not a mining thing. It's just not an Africa thing. Governments, your workforce, your labor unions, in every business and industries around the world has to be number one. Otherwise, you're out of business.
Okay, before we finish, I'm going to throw one last thing at you. We are a very Western-focused group here. We have evolved, we have learned from all the mistakes of the people who've gone before us, and lots of guys are telling us we have to have a strict ESG mandate. But there are countries in the world that come into Africa that simply don't do it. How are we going to beat that?
We just have to lead by example. We just have to assume we're going to get called out someday and make sure everything we've done justifies it.
Fair enough.
Well, I think it comes down to the governments, doesn't it? I mean, and you look at some of the countries we work in, we've got the World Bank, one of the major funders and financiers of those countries, and they push down the ESG requirements you get with the World Bank and that type of funding. So that helps. But I have been to areas of Africa where there's been countries that don't apply those rules, and it's an absolute mess. It is, quite shocking when you go to other mines where they don't adhere to the standards of the IFC, World Bank, etc. So I think it's governments need to, apply the rules and regulations to everybody. I think that's the only way we can try and control that.
Cool.
I think governments basically work from one election to the next, right? And they're elected by the people, your communities, and your employees. So, I mean, if that stakeholder alignment with your communities and your employees are intact, that's the best risk mitigant for anything going forward. So I think, and once again, I think most mining companies recognize that.
Thank you. Caroline?
Yeah, I think, we can't continue to look at things on a relative basis. To Peter's point, we need to lead by example. You can't look over the fence at your neighbor and say, well, he's digging up the ground in a way he shouldn't, I'm going to do the same thing. It can't be a relative comparison. It has to be an absolute, this is what we're doing, this is how we go about things. And frankly, whatever your neighbor's doing, that's his Endeavour rather than yours. So, we try not to view things like that relatively.
I kind of think if you see your neighbor doing something really bad that's dragging down the mining industry and making a mess of the environment and making a social disaster, you should make a lot of noise about it. And I did some business in Ecuador, and they're a foreign country with a mining operation there, and the Ecuadorian government shut them down. No way were they going to have that kind of dirty mining, because they saw what the Canadian company I was involved with was doing. It was, treating its people right, environmentally, remediation. They looked at what the other owner was doing, and we, through that company, went to talk to the government and said, look, this is not good, and they shut it down. So I think you've got anyone who's in mining has a standard to adhere, and if you don't see that standard being adhered to, you've got to shout out and make sure it is.
Thank you. There's no doubt that the best projects I've ever been involved with over the years have also adhered to the best ESG practices. Anyway, thank you very much. Thank you for listening.